Howdy, it's Mike again, and we are going to do a Webby Rambles on slight return on a model book stock, a very important model book stock, and that is what was formerly known as Priceline. You know it as Booking, but back in the day when it had this move, it was Priceline, the online travel company, and it had a massive move, or actually several, and we're going to focus in on one of them. In fact, let me just share with you what we're going to be looking at today. And this is how Bill marked it up when he did a series. Bill O'Neill, the founder of IBD, marked up when he was doing a series in the newspaper on the greatest winning stocks. Now, a lot of people think this is how he traded it. This was not how he traded it. Sometimes he traded better than how he marked it up, sometimes worse, sometimes completely differently. And sometimes he didn't even trade them at all, but this is how he marked them up because that's how he learned by marking up model book stocks. And that's how I learned as well. And so this is a move that we're going to be focusing in on, going from this, from the cup. I don't know if my cursor is showing up on this, but the cup all the way up to the channel line break that he marked, and you can just see a few things on there that he's saying not to buy it at that original cup because it's straight up from the bottom, and then to buy it a couple weeks after that, and then adding to it as it pulls back into the 10-week line a few times, adding to it along the way, not getting shaken out when it looks really, really scary, then adding to it, and then ultimately selling it into a channel line break. So that's how he analyzed it. There's nothing wrong about that. That's just his style, and I'm going to walk you through my style of doing it. And what I would suggest when we're doing these is look at what Bill had, look at what I say, but then most importantly, think of how you would look at it, because you could be looking at it totally differently than either of us or anyone else. You could come up with some original research or original thoughts on there. And that's what you should be striving for. Is it could be something that he noticed on the chart, but just didn't have the room to put it, or I noticed, but don't want the episode to be 8 weeks, long, or longer. So you can't mention everything, but if you notice the things, that's what you should be focused in on, and take notes along this, and rewind where you have to. Um, and really, this is how you learn. Like, this is how Bill learned how to trade. This is how I learned how to trade. Basically, anyone who worked with him would study models, and that would be your guide for the real battlefield out there. So this is how we marked it up, but we will switch gears and do it using the quicksand and Grateful Dead rules that I developed, that we discussed on a prior podcast. And what number was that? Well, you know what? Let's just share. I've got it up here. Let's share the YouTube channel, and let's see. Okay, I would just move this over here a second. Okay, so here's the Webby 5150 YouTube channel, and I put these things in playlists to make it a little bit easier to find things. So in the first one, in the other ones playlist, there's only how I use market surge. So I'll add more. That's kind of the miscellaneous. Then the non-stock related ones, this playlist only has two in there. It's the fear, number 11, and number 22, the goals and the my journey that I just released. And those are actually my favorite by a country mile. Those are probably shouldn't have opened up as much as I did in each one of those, but I wanted them to be helpful. And if you hold back, maybe they're not going to be as helpful. But yeah, very, very raw, unedited stuff in there. In fact, I guess I said YouTube told me that I said a bad word, and this one didn't realize that I did. So, or didn't really remember it. And so I think that they're not showing it as often as they could. So I might edit bad word out and put that copy up there in addition to. So then you've got I just have to find the time to do that. The next playlist, this is where most people are probably going to be focused, and this is the general market series. So things from precedent analysis number one, the 21-day follow through days, a couple on that, market crashes, my web RSI, and then of course the power trend. All these, they're all good. You really, and very important, you got to watch all those really. Now, the model book series, where this one will fall, I would suggest watching number 2, how to build a model book, because that will give you a sense of the importance of it and how that works. And then these can be done in any order whenever you have the time, wherever your interest is, whether it's Cisco, Apple, Google, Amgen. Oh, that was a really good one, because I went over how Bill traded that one too. And then Taser, which is Axon, or Chipotle. And then, of course, with the Google, I also go over the IPO base and how I invented that because of that particular one. Then let's see, we've got my inventions. So we've got pattern recognition, Quicksand, and Grateful Dead. That would really go well with what you're watching now. In fact, any of the model book stock related ones, you should really watch this number 20, which is Quicksand and Grateful Dead. Now, I will, you can keep watching this one because I will explain it enough for you to get the basic concept, but really to understand the nuances, I would watch number 20. Then we've got the web RSI, of course, power trend. Those are duplicates in the other one because they kind of go in both sections. So these are other things I invented, like the 3-month RS, or the growth 250, or the composite rating. And then I just recorded one that I haven't released yet on how to cut your losses. I'm not sure if that's going to be the name that I end up using as kind of a placeholder. I'm not sure when I'm going to release that. Then let's see what else. Oh, and then just the podcast list, and this just has all of them, just in order or in reverse order. I guess I can do this in oldest first. Okay. Then we've got something fun, just if you've got downtime or you just want some background stuff to watch or listen to during the trading day or something, is the non WRO music and other stuff. And this is just where I'm keeping things that I want to watch again or that I want to see that I come across. And so lots of cool stuff. So some stock related things like Wall Street Week back in 87, but most of it is music related or podcasts and things that, and so if you're interested, listen to that. If not, no big deal, man. No big deal at all. So that is, stop sharing. So that's what we are going to, let me get rid of that. Let's see. That's what we're going to cover today. And just a little, for those of you, I think most people are probably returning, so I don't have to get into this too much. But if you're brand new to the channel, welcome. This is the WRO family, the Webby Rambles on family. And I have this channel for 2 reasons. One is for you. And I wanted something that was free that everyone could use, whether you're a billionaire or, you're in 8th grade and you're just interested in stocks. Maybe you're in 5th grade. I don't know, and you're interested in the market or anywhere in between. And so I try to have this where if you're brand new, you can get something out of it. And if you're a veteran trader, maybe you've been trading decades, or maybe you're a professional, that I want you to be able to get something out of it as well. So I try to have something at all levels to just keep it interesting. I want it to be interesting to me now at 53, as well as interesting to me in my early 20s. So that's the goal of this. The other reason for this is, I wanted something for my kids who don't trade. And I never taught them how to trade, and they just never showed enough interest to, I didn't want them to feel pressured into following in their father's footsteps in trading, because frankly, it's a tough gig, man. It is really hard. It's very, there's ups and downs and everything in between. And the ups feel great and the downs feel worse than the ups feel, and everything in between. And it's a grind. And you have to love it. I love it. Like, I love it. I wouldn't do anything else. Well, no, I mean, I would have a animal sanctuary and just focus on music, but but besides that, I'd still be trading. But it's this is what you, if you're watching this, you probably love doing this, and so if you have that passion, that you want some tools to use, and that's what this is. And so I figured if my kids ever got the desire to be to start trading, I wanted them to learn from me, because I spent a lifetime learning this skill set, and I want to pass it on to them. But I don't want to pass it on to them if they don't have an interest in it, and really thinking, yeah, they might not ever have an interest, but when they eventually have kids, maybe 7, 8 years from now, those kids, my future grandkids, might be into trading, and I want them to learn from grandpa, and so that's why I'm putting these out there. And I was just going to record them and stash them away on a hard drive somewhere on the cloud, but I figured the likelihood of them getting lost or a password getting misplaced, over the next, 5 years or however many years, um, if I wasn't around, I wanted them to have it. I didn't want to just spend all this time recording something and just sticking it there and then it goes nowhere. And so I wanted to put this somewhere where it would always be. And I figured, man, if YouTube's not around, we're in trouble, man. Like, maybe the meteor hit and hopefully Musk has us out on Mars or something, or we're in trouble. So, anyways, that's why I'm doing this for you, and really for my kids and my future grandkids. And so a lot of times you'll see me going off on these random tangents that might not make a lot of sense to you, but just put up with them. It's my way of thinking, as if when I'm doing these, recording these, I'm picturing, if I'm lucky to be around, to just talking to my grandkids. And if I'm not, I'm talking to them now, or my kids if they get into trading one day. And if they don't, man, it doesn't bother me at all. In fact, in ways, especially on hard years and hard times in the market, you almost don't wish it on anyone, but it's such a fun thing to do, man. There's nothing like making money using your mind. It's frankly like the coolest thing out there, it's just a big game. And that's how Bill looked at it too. It was a game that you're always trying to figure out, that is impossible to figure out. So you're just trying to put as many of the pieces of the puzzle together to get in the zone for as long as you can stay in the zone. And then once you're out of that zone, you're trying to get back into the zone. So that's what this is. These are about, and it's really geared towards all the things I learned the hard way, you know, in the market. I'm trying to just share with all of you to make it easier for you. I'm a big believer in karma, and in helping others and just doing good things out there. And that's why I'm keeping these free, even though I should frankly charge for these. It's just not what I want to do at this point in my life. I just would rather just give this stuff away, and we'll see how the world um, plays that one out. So, anyways, let's get started with this. And again, let me just share what we are going to be reviewing or going over. So again, this is how Bill marked up the Priceline move. And now we are going to go in and study this. And let's use market surge. Let me stop share there. And we are going to, okay. All right, just want to make sure this is sharing. So we're going to be starting out this base here in 2006 on booking BKNG, which is Priceline, or which was Priceline. So let's just make sure that everyone is familiar with things. This is the relative strength line. This is going to be a big part of everything. The green line is, let me blow it up even more. Okay, the green line is your relative strength line, and that is how it's doing versus the S&P 500. When it's moving up, it's outperforming. When it's moving down, it's underperforming. When it's going sideways, it's the same as a market. That is what the quicksand and Grateful Dead rules are based on. And again, I'm just going to give a little basics on this, but if you've never watched the quicksand Grateful Dead episode, certainly, if you're finding yourself lost, go back and watch that and then circle back to this one. So this is just going to be a brief overview. So the concept is, this is a rule that we're going to use to try to hold a big winner. It's something that I developed over many years, trying to figure out how to solve a problem that I have, and that is not being able to hold. I can buy right, and I do a fairly good job at selling, but holding is where is my weakness. And so I'm trying to turn that into a strength, and I'm doing that by using these relative strength lines. And the key concept here is, you're buying the stock right, and then when I'm going to stop sharing for a sec. So the concept with the quicksand Grateful Dead is that you're trying to buy the stock exactly right. And then when you have a gain on it, and this is why it's very important, you're not using these rules when you're down on a position. You're only using it to manage a winning position. So the concept is, you're trying to hold it until you get a quick signal, then you're going to sell some. You get a quicksand signal, you're going to sell some more. A Grateful Dead signal, you're going to sell the rest of it. And that's your core holding. And for these, we're just keeping it very simple and just saying, okay, your maximum position size is 25% of equity. And now I'm just using that as a placeholder. For you, maybe 5% is a huge position. Maybe for others, 50% is a huge position. You can adjust the numbers for you, but just to keep the math simple, I'm saying for this series that 25% is your maximum position. And that goes along with what Bill would say, because he would say, if you've been trading a while, trading on margin is fine. So that would mean 200% long is your max. So let's say you have 100,000 in the market, that would be 200,000 worth of total market exposure, 100,000 borrowed and 100,000 cash. Now, if you're new to trading, do not trade on margin, man. Don't trade on margin, please, man. That's how you can blow yourself up. Do not trade on margin. But if you've been trading for a long time and you understand the risks and everything, that's what the concept is. So if you're new, adjust things down, and you do not want to go with a 25% position. That would be very reckless, and you're not going to be able to handle the ups and downs until you've been in the battlefield for a while. So this is why I'm saying that this is just a placeholder, 25%. If you're new, maybe 10% is your max, or 5%. So, and it also depends on how much money you're running as a percent of your overall net worth, and how young you are, how old you are, and all that stuff. And that's really something that maybe talk to a financial advisor about. I'm not a financial advisor. I can't give financial advice. This is me just trying to help out. So take it with a grain of salt and review all this with whoever the appropriate people are. So anyways, we're going to keep 25% as our max position, but our core position is a subset of that, and we're going to consider that 15%, 15%. So from 15% up to 25%, we're not talking about those buys and sells today. That's, you selling into strength, or you're selling into some weakness, or what have you, massaging your position size for any other reason, overall account volatility, anything else, but your core position, your 15% of your winning trade, we're going to dedicate to these quicksand, Grateful Dead rules. And on the simplest level, there are some more complicated ways of doing it. We're going to do a 5% sell for each one of those. So 5% for quick, 5% for quicksand, and your final 5% for your Grateful Dead signal. And so and I'll show you the chart in a second, but the quick, that happens when your RS line goes through its short-term moving average. That is your quick. So you sell 5%. Then you sell another 5% if your RS line goes lower than that point. So wherever that point is, if it ends up going lower the next bar, then that's going to be a quicksand, because they can start off with just going just a little bit lower, and then a little bit lower, and a little bit lower, and a little bit lower, and before you know it, it's gone down quite a bit. So any movement below that is another trigger. Then your final Grateful Dead signal is that when it goes through its longer term moving average of your relative strength line. So 5, 5, and 5, quicksand, Grateful Dead. So I wanted to make it as simple as possible, and some kind of goofy names. One, because I've given away all my intellectual property or people have taken it, whichever way you want to look at it. And so I decided that going forward, I was going to put goofy names on everything. So if someone wants to say that they invented the quicksand Grateful Dead signal, everyone will know where it really came from. It's just an ego thing. Or maybe another word for it, but we'll table that. So let's look at it on the chart, and just move this over for me. Okay, so here was our green line. That's our RS line. So right here, that would be a quick, because it went through it. Went a little bit lower the next week. That's a quicksand. And then right here goes through your blue line. That is your Grateful Dead signal. So let's just go over that real quick on those exact dates. So on June 30th. So here it's crossing through. So that's selling 5%. That RS line goes lower. That's another 5%. And on that week, it goes through your Grateful Dead signal. So if you had a winning trade on this one, let's say you bought it down here or whatever, that is where you would exit your full position. And then for these settings, you just go up in here to the little wrench icon and go into the relative strength line. And here is your default setting, or not default. Here are the settings for the default RS: 21 day, 8 week, 10 week. These are all simple, not exponential. For your RS2, 50 days, 21 weeks, 24 months. So again, 21 days, 8 weeks, and 10 months for your RS1. And your RS2 is 50 days, 21 weeks, 24 months. Now, these are subject to change. I mean, this is what I developed over, years of using them. And, but they're, I've tweaked them before, and I plan on tweaking them again. So anyways, we are going to focus primarily today on using the weekly chart, which is for position trading. On the daily chart, that would be more for swing trading. You can also use the daily chart to kind of get you to the point where you have a decent gain, and then you switch over to the weekly for the rest. And if you have a huge gain, you can actually switch over and use the monthly on there. But so let's start going through this. This is not the base that Bill marked up. He marked it up over here, because if you bought it out here, at this point, you've been in it for 11 weeks, which you can see up here, and you've round tripped it. So his concept was, and I agree, like, why are you going to study at this point? Because it completely round tripped, and that's not your goal, is not to round trip. You want to steady ones that have moved up from there. So let's just go out a couple weeks. Let's see. All right, so now it's starting to move up the right side of this cup. So if you had bought it over here, you would have been shaken out one way or another using the quicksand Grateful Dead or really any other signal. So now you're looking to get back into it. And if you recall, he had said to not buy it up here. But, let's just be open-minded about this. This gaps up through the 50-day in a big way, and it's holding in here nicely. Let's go out a couple days. Like right there, that's where I'm buying it, frankly, and you've got to put out of your mind anything that Bill said or anything that I say. And when you're looking at this, you want to think like, I know some people like Allie, who I work with, she's really, really good at buying things as they come through the 50-day. And, so I'm sure that's where she would be buying it, and I totally get that trade. I might be buying it there, but really I would be buying it on this day here because you've gapped up and you've moved up and now you've paused for a little bit. Now it's not the full 5 days for, a handle, but it's in that concept of you've got this nice little shakeout there from there, and then it's moved back up. So I wouldn't buy it on that shakeout. I would wait for this strength to come in, and let's see what happens now. Now it's moving up, and it kind of stalls there as it's getting near highs. That's normal. And now it's breaking out to new highs. But remember, he said not to buy this. And why did he say not to buy it? Well, he said not to buy it because it didn't work. But we don't know that it didn't work. So we are not going to use hindsight. So we are going to walk through this as if we bought it here. And frankly, I would have been adding to it right there. Because when you're looking at it, you don't want to go, well, it's straight up from the bottom, so I'm not going to buy it, because I'll just tell you, there was another one. Well, we'll walk through it and then just remind me and we'll circle back to that other one. Well, you can't remind me, so I got to remind myself. I got to make a note to myself to go over another stock. Okay, so let's go forward another day. This is not the quicksand Grateful Dead yet. This is just to illustrate a point. So we're going along. Everything looks good. Normal and natural. Totally normal and natural. Pulling back into the pivot. Normal and natural. This is still the daily. We're just going one bar at a time. Now I would be adding to it. Now I know it falls apart, but the point of this is not to try to make yourself feel special and that you buy it and every buy that you have never goes lower. It is to prepare yourself for the true battlefield. That's the way I like to approach it. Bill had a different approach, and he was a billionaire, not me. So, logic would tell you listen to what he had to say, but I'm just walking you. I'm not him. I'm me. So I'm going to walk you through how I do it. So now you go through. Okay, that's your first sign that that's abnormal. Okay, that's a mini expectation breaker. An expectation breaker is a thing that I coined along with Charles and Justin when we did the market school rules back in 2011, 2012. So what does an expectation breaker mean? It means when you're expecting one thing and something else happens. So let's go back one day. On this day, think to yourself, what would be normal and natural the next day? Well, the normal and natural would be about a 2% gain closing near the highs, like building on itself, or at least a day like this right here, which is 1.8% closing near its highs. Like when you have a move like this, that would be normal and natural. Then you get this move down, closing underneath the lows of the prior day. That's weird. That's very strange action, and it's down 3%. So I'm going to, unlike this day here on the 24th, like the 24th, this is important. Let's just go back a couple days. Okay, so on the 23rd, you're kind of went to new highs, and then you closed down, closed in the lower half. So your expectation is either flat or sideways, or flat and sideways, same thing, flat or down, not major down, but just your expectation is that, and it goes lower. So there's no need to sell because it's within your expectation. Now, if it was breaking through a level that you had a line in the sand, that's different. But now we go forward and is acting normally, and then we've got this. So that's problematic because now you're thinking to yourself, well, maybe it's going to form a base on base, forming another base over here. But that is not how stocks act in a normal fashion. It could have been some sort of news or whatever, but I would be backing away from any of the shares I bought there or there on that day. But it's not enough reason to sell the shares that I bought here because I'm still up on those and that's still acting normally. But now I'm thinking, okay, this could be dead money and it's back really at its pivot, just penny underneath it. But it's there, it's firming up, but it's not strong enough yet. You want to wait for some sort of good entry. Let's see. Okay. Well, you know what? Frankly, on this day, because it went over that, I'm going to have to buy those shares back. Anything that I sold there, and that looks good. Now I don't know why it had moved down before, but now it's acting normal. And then you get this big gap down. It's probably, I'm guessing, earnings, but that's the reality. And now on this day, I'm going to sell the whole thing because now I'm down underneath what I paid for it. I had added to it on this day and it closed through my, it's down almost 10%, closing at the lows, slicing through the 21 day, which is your green line there. And your RS line on a daily has gone through both of your quicksand, Grateful Dead. So there's no reason to hold it at this point. But frankly, there was nothing wrong with it before. It just wasn't ready for whatever reason, and that happens. And then so the next day it's kind of firming up, and we're not going to go bar by bar through this whole thing, just this very beginning. Let's see. And I don't remember exactly what happened. Now that's not good action. I mean, because look, it's wedging up here, stalling. So now this kind of resolves that. You would like to see it undercut that, or maybe find support at the 50-day, but this is not in a position to be bought, in my opinion. Let's see. Now that looks good. Okay. So if you really knew this one, you could buy it there with a stop right there. But I don't like buying it in that position because you've got this overhead here with this gap down. I'm not going to buy it there. But if you sat there and said, oh, okay, I'm going to buy it there because now I have something to trade against because that low is very close to the to 30 as well as the 50-day, which is your red line, then yeah, more, nothing wrong with that at all. For a swing trade, that would be fine. But today we're talking about position trading. Okay, so now you get some gap up, probably some news related up 6%. So now it's had its shakeout, and it's back up in the same space as before. So then that's where I'm going to have to buy those back. And as we talked about on the last episode, on the episode about cutting losses, which I'm not sure if that's going to be released or not before this one, but about when you're shaken out of something and it shows the proper strength and is acting right, of buying those shares back plus some. So let's say you sold up, to keep it simple, you sold 100 shares, that was your position and you're buying it back. I'd buy 101 shares or up to 110 shares. I'd buy between 1% to 10% more, just as a kind of a basic thing. Because what you don't want to do is sell, take your loss on 100 shares, and then if you're going to buy back just 10, and fill in the numbers. Like if you're like, oh, well, you're running like size and call it 100,000 shares, whatever. But we're just going to call the easy round numbers here. So I'm going to buy those back. Now you've got the risk that it could come all the way in and close part of that gap. So I'm not sure if that does or not. But it just builds on itself. So that's cool. So I would be adding to it on that day. We'll switch over to weekly pretty soon. It's just, this is how it should act when it breaks out. Like that's normal and natural. So this is it on a daily. So I would have bought it back there and been adding to it here. And let's go over to the weekly. This is beautiful now. You had your powerful move off the bottom, had it shake out in there, and now it's even better than it was before. And this is where Bill said to buy it for the first time, and he said, do not buy the other one because it's straight up from the bottom. But there's another one that was straight up from the bottom that he said was perfect. I thought it was Baidu, maybe it was Baba. Let me see. No, let me see. Not Baidu, maybe Baba. Oh. God, I really thought it was. Oh yeah, it was Baidu. It was over here. So let's just see. Okay, he once said this was a perfect base, and it was at a level 4, and we were all sitting in the back of the room in Santa Monica, like looking at each other when this came up, and he said it was a perfect base because all of this power from the bottom, and he had just got done talking about how you don't want to buy something that is straight up from the bottom. So now, granted, this one never went backwards, it just went sideways. Now, a little nuance is, let's just go there to 6-1. That makes it slightly different, but I don't think in a material way, that when this came back up from the bottom, it stopped before it went into new high ground and kind of handled out here a little bit. Let's look at it on a daily, and did kind of its shakeout in there. And then look, it broke out and then had one of those shakeouts and then moved. So similar, but not the same, like in the same spirit. But again, this power, I look at it as a positive thing. Now let's go back to, what is the Priceline? BKNG booking. And then let's go, where we were right over there, 926. So forget what you're seeing. So it's fine. Like go ahead and study it now, but you've got to purge that information, because as we're trading, you want to pretend like you don't know what ended up happening. So where did we say we were going to go to? 929. Okay. 929, 2007. Well, that didn't work. Must have gone to the wrong. So, okay. This is off by a year, just a little bit. Okay, so here it is. Let's start going forward. Now, remember, we are focusing in on this RS line versus these two lines here. I'll blow this up a little bit more. So these two, as long as it's above those, that's what we're going to focus on today's session, on just holding our core position. Remember, you can make your position up to 25% of your account, but once you've got a decent gain, you want to keep it. If you're implementing these rules, and you don't have to implement them on every stock, just your stocks you're trying to hold for a big gain, kind of your A quality stocks, then you're going to go in there and say, okay, I'm going to use these rules for 15% of my core, which is 15%. So if you see sell signals along the way, you can always do that. Like right now, it's up, 20 to 25% out of its base. And lots of times Bill would say, just take some of those gains there. There's nothing wrong with that. But that's not what we're doing right now. We're focusing in on our core, and look at that RS line is still above it. So nothing to do. That's the beauty of this, is it cuts out that thinking, okay, so now we've got our first trim, 5% trim, because we've got a quick. The RS line went through there. So now we're down to a 10% position max, right? Because by the time you're implementing these rules, that other 10% from 15 to 25 has to be sold. So now it's lower. So let's just go back here a second. Here's our first, that's our quick because it touches the short-term moving average. Now it goes below that. So now it's a quicksand. So now we're only holding on to 5% of our position. Now we can't add anything back until that RS line is back above both of those moving averages. So now at this point, it didn't end up, it's called the quick and the dead, because Bill would always say, one of my favorite lines out of his book was, in the market, there's the quick and the dead. And so you want to be quick. And if it doesn't end up falling apart, which lots of times they don't, then you got to be willing to buy those shares back. And at least using this style. So at this point now it's back, it's finding support at its 50-day. Probably would have bought some at the high of the day, frankly, because it was above here. I wouldn't buy any at the close of that day because it doesn't look that good. Let's go now on this day, I would certainly buy some back. But let's look at it on a weekly, go out another week. Okay, so it's inching up. So you could have bought your position back, maybe not the full 25%, but you could have bought it back up to your 15%. And it's moving up nicely. You could have more than could have an even bigger position if you want. Okay, it looks like, it's crossing back through there. So here is your quick signal again. Looks like it goes lower. So that would be a quicksand. And then now it's back up at this point. Because you've been chopped around a bit, you don't have to buy the shares back now. Now, I'm just wired to buy them back because it doesn't bother me, getting shaken out of some. And I would look at this and go, okay, it's moving back above your 21 day and buy a little here and buy some here. That's me. Now, as you're going through this, you'll find that maybe that's too much trading for you. But you got to remember, we started watching this back in August. It's already February, so we haven't really done that many trades. I mean, I trade very actively, so this style on a weekly is really not that active. It just feels active because we're going over it. So I certainly have my full position back at this point. Probably a 25% position. Let's look at it on a daily, because that's acting normally, right? This is a little mini cup. Obviously too small of a cup to be a proper cup because it's only a couple weeks long, but still in that same feel. So adding some here, adding some here, adding some here, and adding some here. That's how I would do it. So you got to ask yourself, how would you do it? So let's go out a week. Ooh, monster move. Okay, up 13%. Just building on it. And we're just using those quicksand Grateful Dead rules. Let's see. So you got 3 weeks tight in here. I'll have to do a episode on that. This is moving up nicely. So I'm glad we bought it back. Ooh, you had a little quick right there for 1 week, so you had to trim some, and then you could buy it back if you want. Probably would. And then you got another quick, so you got to sell that. I mean, that's what happens with these. Let's look over on the daily. But, think of it. Like it's here, closes there one day, and then the next day you're down 9%. You got to be taking some action there. Unless you're just playing by a completely different set of rules, and there's nothing wrong with that either. If you're looking at this and just going, okay, well, you're going to hold it until it breaks the 40-week line, which is this black line here. That's fine. You're going to hold it until it goes 1 ATR below the 10-week line and closes below that on a Friday. That's fine too. Like you can use other rules in here. This is just the rules that I like to use because they work for me, and I'm just sharing them. And frankly, I think they're the best rules I've come up with. So now we've got a brutal shakeout underneath the 10-week line, upside reversal in here, and it's getting choppy. So at some point, you looking at it going, okay, this isn't a trending stock. how much of it do I really want to pile into? Because if I'm going to have to be buying and selling, if I'm not comfortable with it, maybe I don't put it back up to a 25% position. I just keep it at this core and then just try to build it up to 15% and just use it quicksand, Grateful Dead on those. Like, you want to just be thinking, that the market is very challenging and tricky, and there's no perfect thing. And so what you're trying to do is just be as realistic and as honest with yourself as possible. As, how would you be, trading in this? And maybe you want it to settle down a bit. Look at those spreads for the last, 3 weeks, or let's go back a week. The last 3 weeks, the spreads are really wide. So even though it looks like it wants to run up to 80, because it's been all over the place, you might want to just wait for it to settle down a little bit, even just a couple weeks or even 1 week of a tiny spread to let you know it's back in equilibrium. So there, like, that's a good sign. That's an inside week. Let's look at it on a daily chart that it's starting to tighten up a bit, and it kind of looks like a little V-shaped cup with handle. Obviously, way too small to be a proper one. Okay, now downside reversal. So now it kind of resets that, waiting for things to settle down. And you did get a quick in there, but I don't think you'd bought it back yet, right? So you didn't have to take action on it that week because you were probably still down to your 10% position, because you had a quick there and you had a quick there. So, certainly at this point, the most you would have had is a 10% position. And so you're probably waiting for a good entry. And this looks like a really good entry point. And so, you're buying it back here. Your RS line is, clearly back above it. It's moving up nicely. Not doing anything wrong. Now we've got another quick, so you've got to take some action there. And that's pretty bad, but really look, it's down 10% on the week, but look what's going on with the S&P. But let's look at the NASDAQ. So on a week like that, I mean, that's just going straight down. You're going to take action. And look how choppy the market was in there, which is just telling you that, everything was difficult during that time frame. Very, very, very tricky. Let's go back over to BKNG. Okay, so a bad day, and you get another quick on there. So the most that you could own is 10% there. It's down again, and it's gone lower. So that's that's your quicksand. So now you're just down to a 5% position. And you look at that, you go, okay, well, you started it over here, and you've got a 5% position. Now we've had to do some buying and selling in there, but think through and just be intellectually honest with yourself. Is there something better, given the market conditions, that you could have used? And that's a tough one. I mean, you could just use trailing stops. I mean, obviously the 40-week line hasn't triggered yet, but a buffer underneath your 10-week line. But I'd still prefer the quicksand Grateful Dead. Okay, so now you've got this massive move up, and so that looks like a game changer, up 24% in a week. So if you were down to 5% of your position, you're going to be building your position back up. Now you've got this nice gap up, and you've got to figure out how to get back into that. So I would gradually start getting back into this, because when it has a move like that, you would think it would continue on. And even I'm looking at this, it feels like $100 stock or $120 stock. But with as volatile as it's been over the last month or so, really, really volatile since here. So since May, and it's August. So that's a long time that it's been choppy, but the market has been choppy. But this being that powerful, let's look and see what did the market do? Did the market have a big move? No, the market is coming back in. So this is really showing some strength versus the market. And so you're buying back. it's not realistic to say you're going to go from 5% to 25% in 1 week, but you're trying to move in that direction, or at least from 5 up to 15%. That would be more realistic. An inside week, that's normal and natural, and then it builds on it. So this is a time that I would be like here, on this day there, actually on this day, this day, this day, and this day, I would have been adding each one of those days. And in fact, probably on this day too, using this as a line in the sand. But that would have been tricky because intraday at this point, that would have looked horrible. So you've got to be realistic with yourself and just go, okay, how would you have really wanted to trade that? And then sometimes the answer is just more gradual, where where you're at, that coming into this, you were only 5% invested in it, and then it has this huge move. It could just be that you're going to not add more than 1% a day to it, and 10 days later, you've gone from a 5% to a 15% position, or no more than 2% a day. And so at that point, that you could be getting back up to your 25 in a blink of an eye. So just find, sometimes it is time based as well as price based. So this is now really acting, really well. Let's see. Waiting for, another signal. So you've clearly built up your position to whatever you are feeling, whether it's 15% or 25%, but you're at least have built it up to that 15%. And the RS line, you can see it's starting to run into some trouble here. Okay, so now you've got another quick. So then your max position at that point is at 10%. It goes right back up. Okay, so you're figuring out a way to get back into that. Is that real prices? Holy mackerel. Oh my gosh. I'm stressed out. Man, I got to tell you, like when you're, this is important. When you're doing this and you're moving along, you want to pretend like you don't know what happened. You really have to, I cannot stress that enough. You need to get that ingrained in your mind, because that's what it's going to be like in the real battlefield in the market is, you don't know what that next bar is, or the next 10 bars or whatever. Since you don't know that, that's what you want to pretend when you're going through these. So when you find yourself going, oh, or you're excited that it moved up, or you're upset that it moved down or whatever, or shocked, you should be shocked, because that's telling you that you've really done that in your mind. And that's a really important concept. You're not trying to be the perfect hindsight person. What you're trying to do is learn how to have rules, so when you're in the battlefield and all the emotions are flying, that you know how to handle the market, because it's very tricky. The market is very tricky. Anyone who says it's not tricky, well, they're either the smartest person in the world and they figure something out, or they're not that bright. I'm not sure. The market's tricky, man. Okay, so let's go back to this. I'll move this stuff back around. Okay, so that shakeout, that would have been brutal. That would have been really, really brutal. Let's see, what was the market doing? Oh, the market was falling apart. So this gives us a lot of info. So NASDAQ has fallen apart. This was the bear market top, or the bull market top in 07. And here was the expectation breaker on November 1st of 07. That was the one that the three of us coined the name expectation breaker based on that. And that was really a game changer. So now let's go back to booking. So this is clearly, there must have been some news or something that made it defy gravity, because this was, up 23% when the market is falling apart. So it was falling apart with everything else. Then earnings or news must have come out. It looks like earnings. So let's go over to the weekly. So the RS line, remember, these are based off of the closing values, not the inter-week values. So it was able to hold up here. But when it was down here, that would have been different. That's a might have to do a whole episode just on intra-week stuff, because that becomes very tricky. But whatever, let's say you had sold it down to a 5% position because intra-week it was doing a quick and a quicksand, which you don't see on here because it's using this closing value, this value. But if that would have been the day before, it would have probably been down here. So that's where you might have been doing some selling. So you've got to be willing, to buy that back. So let's see. Now, given what the market is doing, that doesn't mean you have to buy have a massive position, but still are 15%. And it's building, it's building, it's building, it's building. I mean, what a monster. And now it breaks its 10-week line. Okay, so here you get a quick, let's see, the week before, was that no, not quite. So here's a quick. Now, we discussed this on another episode that sometimes when it breaks it by that much, like you see over here, it just broke it a little bit. So you kind of have to think, a little bit here and just go, okay, well, the reality is that went down quite a bit. So you might do a quick and a quicksand, but we're just going to keep this simple and just say, we're going to just say that is a quick signal. And just, so now you've got a 10% position. Now it didn't go lower, that RS line. So now it came right back, still have that 10% position. Wow. I wasn't expecting that. Man. So you would have had your position back, throughout that. So you have at least your 15% position. And it's almost at a quick. Didn't quite do it. Almost at a quick. Okay, there. Now we've got a quick. So now you're down to a 10% position. Man, it goes right back up. Still at the 10% position. Okay, now you've got another quick. If you had built it up to a 15% position, then you would add to act on that quick and sell those here, but we haven't because it really didn't give us a perfect entry given the context of everything. So again, this is the line. If it went lower than that, we would have had to have sold it, or if it goes lower than here, it would be a quicksand. That's kind of a nuance on there. So it goes right back up. You probably still have your 10% in there. Okay. It's all gone here because when it goes through the blue line, you have to sell the whole thing. So we started it off here and we've had at least a 5% position in it this whole way. And let's look at what the market was doing. The market is in this bear market and you still had this big winner during that, which is just, again, like I always say, like if you can find something better, go ahead and do it. And so this is where if you would have been using the 40-week line, which sometimes corresponds, but certainly not all the time, with this rule, then that would have triggered there. Now, if you're using a monthly chart, you could have gone out even longer, but that's going to give you a brutal exit. Here, let's just to show you. So that would have done it all the way over there. So there's a time and a place to use a monthly, and that's probably a topic for a different episode because look how far down it has to go. And so when you switch over to a monthly, you have to have a lot of conviction and you have to be willing to give back a ton of your gains. But there are times where it will really help, and in other episodes we've seen that. So let's go back over to the 4th of July, leaving Texas. A little something for the deadheads. Okay, so come on. Are you telling me you didn't get that Jack Straw reference? You need to brush up on your Grateful Dead skills. Anyways, sorry. Sometimes I go off on those tangents and I just can't help it. So here was this move. Now, the bear market started here, right? Oh, no, bear market started here. So from here to here, it was very difficult, but that was one of the worst bear markets of all time because we had the bear market in 1929, we had the bear market in 2000, 2002. And then we had the 07 to 09, which is this one, as well as the 73, 74. Those are your biggies that you want to study. So that's how this one played out. Now, let me just stop share for a second of this. And I'm going to share the how Bill marked it up as a refresher. So just a reminder of how, how he ended up doing it. And I don't know if my mouse shows up on here, but so we talked about the original cup that, that didn't end up. Let me see. Does this work? Okay, yeah. The cup that he said, not to buy it out of here, but we bought it anyways, and then we bought it back. And he was just saying to add it here, adding it here, adding it here, adding it here. And he's saying not to sell it in here when it breaks that. Well, why? Because it went higher. I'm just being honest, man. If this went through, he would have said to sell it there as it broke through the 10-week line. And I'm not saying, but that's how he would have marked it up for himself too. It's just how he was wired to mark things up using hindsight. And that worked for him like a charm. Like that was just how he thought, just how I think in quicksand Grateful Dead. That's how I think. That's how he would think. And then you need to figure out how you want to think. Now, the interesting thing here is this channel line here that he's saying to sell it when it goes through there. So we'll go back and study that channel line, and that's where he's selling. So he's saying to add it here as it's coming through, and we talked about adding, but he's saying to sell it up there. So your first point being here, and so I'm going to stop sharing that, and I'm going to share market surge. Okay, and let's do the ones. Let's do it the exact place where he had it. So he had it out to about this week here, 6-6. So we just want to make apples with apples charts. Okay, because sometimes the scaling will get changed. So he's saying, I'm just looking off on the side to, where was he doing so it was from this over here. So it was this bar here, and he was making that tangent with the peak there, and he's saying it to sell it there. It never goes higher. Okay. Right. So let's understand what a channel. I'll do a whole thing on channel lines because I didn't like hindsight channels. So what I did is I created pattern rec to have it. We just never released it. I'll probably have to recreate that and release it at some point. But some of the important things were he wanted the points to really be over a long period of time. It had to be done on a weekly chart and it had to be logged. There's a lot of things involved, and he wanted multiple points really. So you got 1 point here, another point, and then the third point. Now it's debatable whether you have 3 points and then a breakthrough or 2 points and then on the third one is your breakthrough, and that's where you sell. And that's what he would say. Really 2 points. Again, I'll just redo it here. 2 points, 1 point, 2 points. Or actually, yeah, 1 point there. And he's saying this was, what was he saying? That this was our other point there. So it was off a little bit. Let me redo that. So he's saying from here, and he's making it tangent with this week right there. Okay, well, that's a perfectly data fitted line. Now let's think through. We don't want to have it right out of the base, can't be before our first base, and it's got to be at one of these peaks afterwards. So this is your first potential place where you can do it. And you want to do it over a long period of time. So right there, then that would have said to sell it right there. Now, another line that you could have used is you could have started it here and gone through there, and there's 3 points, and exactly where we're saying to buy back, you're selling. So, or you could use, what he was doing, which was right there. So I think that the takeaway for it is channel line is not something where you sell the whole thing. You recognize it and you're cognizant of it. And sometimes they break an upper channel line and then just start growing at a faster pace. But lots of times it means they've gotten ahead of themselves and they need to kind of come back in the way this happened. And I remember, here, I'll just share this one. Bill and I were both trading Amazon together back in this time frame. And I'll tell you, we missed this channel line top right there in real time. We were both hot and heavy. I remember talking to him on the phone about it when it was coming through over here, and we were both so excited about what Jeff Bezos was doing and how great it was going to be and all this stuff. And we did not see that channel line break, and we got caught in this on this October 24th. Let's see. I might just do that whole one as a, oh wait, no, that's the wrong year. Just off by a year. So remember him calling me up on that gap down, pissed at himself and me, that we didn't see that other thing, that we got so excited about it and didn't realize that it had been going through that channel line, and that it was really going through, kind of on, let's see, let's just go back a couple weeks, really on that week, right? And there was another PM on the staff who did sell it there, and more power to him, man. He saw it, and we didn't. We got so caught up into it, and then we ended up selling it on that gap down, and blew out the whole. From memory, we both blew out the whole thing there. That was brutal, down 9% on a big position. That was, so there's something to be said for these channel lines, but if I could go back in time, I wouldn't have sold the whole thing there, but I would have sold a lot of it, maybe a third of it into that. Then I would have had some at good prices, and then the rest would have sold there, because if you study channel lines enough, you'll see that it's just an offensive sell signal. It's not the final offensive sell signal, especially if you do it on multiple, if you're really objective about it. And that I found by just building it, because when I built it, then I had all these channel lines all over my charts with the same logic. And then once you saw it, you're like, oh, wow, they're all over the place. But we would always do it in hindsight after a stock had topped, and then go, oh yeah, well, we should have done that channel line break. So anyways, that's a tricky one. I'll probably do some more on that. Let me see, is there anything else I wanted to cover on this one? I think that's about it. That was pretty quick. I'm getting better at this, but then again, I'm doing these to have a few in the can, because I'm going to be tied up on some weekends. I try to do these every week. So we are done with this. So again, what I would suggest you do is go in and do a change date and walk through this and take notes and do it several times. Go through it the first time, maybe just on the weekly, and have some basic rules of, you're going to have, your max percentage, whatever your comfort level is. And then maybe you go, hey, I'm going to do the quick and the quicksand at just 2.5% each, and I'm going to keep 10% for the Grateful Dead signal. The final one. That's fine. Or in reverse, maybe you do, you know, uh, 7.5% for the first bid, 5% for the next bid, and then the last, the remaining amount for your Grateful Dead. Like, try it out and see what meshes with your personality, because I'm still messing with this, and I'm going, okay, well, where do I really want to be? Because you'll see that your final sell at your Grateful Dead signal is going to be in the dirt, right? The whole point is you're trying to we're trend followers, and this is a trend following thing, and you want to try to give it as much room as possible. And there's that Goldilocks thing, is like, how much room do you want to give it? Now, we didn't talk about offensive selling. So remember, even in the most basic level where you've got the 15% of it for the quicksand, Grateful Dead, and then another 10% for your discretion. Well, there is a lot of discretion in there of, selling that 10% into strength and things. And that's just not what we were talking about today. So I hope you got a lot out of this. Again, if it was confusing to you at all, go back and watch the episode that we have on the quicksand Grateful Dead, as well as, frankly, all of the model book ones, because I discuss it in all of those, I believe, and is really the theme through it. And I think after you do it, a number of them, you'll kind of get the concept, and feel free to tweak it. Can't say that enough. That's a big deal. So we are switching gears now. Now we are going to wrap this up with some music, and I thought this would be a fun one and a little different. We are going to go into, what do we have on today, kids? Don't be scared. It's the Cult, not a cult like, a religious thing. It's Cult, the band, the Cult. British band, from the late 80s. And great band. I saw them a number of years ago when Guns N' Roses first came back on tour. They were playing at Dodger Stadium, or Guns N' Roses playing at Dodger Stadium, and the Cult opened up for them. Hope I'm not mixing up stories, but yeah, the Cult opened up for them, and it was just amazing. They were just so great, but they just aren't that popular for some reason. They were popular in the late 80s and 90s, and then they just kind of faded away. But man, that Guns N' Roses show, oh my God. So Eric and I were there, and at that point, it was my favorite concert I'd ever gone to. And we just had a blast. I was not expecting Slash to be better than he was when I'd seen him, in the 90s. Oh my God, he was so much better than he was. And they put on this great long show. And then after that, when I went to go see the Grateful or Dead and Company at the Sphere with him last year, that was my favorite concert. That was unbelievable. And then I saw him again here recently. But anyways, that's not what we're talking about. Don't get me off on those tangents. We're talking about the Cult. So they've been around a long time. They're still around, but I think the Cult Electric, that's what we're talking about today. That is my favorite album of theirs by a country mile. And so I'm going to share with you, let's see, share Spotify. So here is the Cult, not a cult, the Cult. And some of their popular songs, you probably heard this one, the She Sells Sanctuary. Well, not really. I mean, it's an okay song. That's off of a different album, but that's their most popular one. But let's just show all the albums, and just the albums. So, they've got a bunch, but this one is the one that we're talking about today, the Cult Electric. This is their best one, and their second best one was Sonic Temple. And so this one was in 87. And from this, They are all great songs. There's not a bad song on here. What I would suggest starting off with is Born to Be Wild, because that's a cover tune, obviously. Um, and if you listen to it, it'll kind of get you in the feel of this album, because there are other albums where like softer, and there's a reason why this was, in my opinion, was called electric, because it was very much more, you want to think kind of like more AC/DC ish than their other stuff that was more soft, not super soft, but like, you know, more touchy feely type of stuff. And this was hard edge stuff, and just a different feel from their Love album and their other ones. But Wildflower is a great one. Little Devil is another good one. They're my favorite one on here is got to be, well, oh man, that's tough. Love Removal Machine is certainly the most popular one on there, but I think I like King Countryman even better. And look at that, that has the second lowest views on there, but it is such a great tune. Electric Ocean is a good one too. Like, man, such a great album. And what made me think about sharing this one was to just keep an open mind when you go to concerts, to go see the opening band, because some of my favorite musicians that I've stumbled across have been because of the opening band. So that was Marcus King, Jackie Green, Johnny Lang, all those where they had opened up for someone. So, Marcus King had opened up for As a Crow Flies, which was a Black Crowes thing when the brothers weren't together. Jackie Green opened up for Johnny Lang back in 2002 when I saw him, and I was an instant fan. And then Johnny Lang opened up for Aerosmith in '97, I think, and I became an instant lifelong fan. In The Cult, they opened up for my first concert, real concert I ever went to, and that was, let's see if you can see it up there, right up there, Billy Idol. Man, I was a huge Billy Idol fan, and don't ever talk to my sister, because she may or may not have some blackmail on her of a picture of me in junior high dressing up like Billy Idol for must have been Halloween or something like that. I think I did that a couple of years in a row. So Sherry, if you're watching this one, which I know you are because you're watching all of them, and I really greatly appreciate it. My sister doesn't trade; she'll never trade ever, I don't think. And she watches these, and it makes me so happy. My parents watch the last one too, and they're like, the one about the car accident. They're like, I don't remember that, and I don't remember this, and so, which is another reason for me to keep doing these, because like, if I wasn't around for whatever reason, and if my parents don't even know something like that, that I must have just kept a lot of stuff to myself, and I had my head down and just plowing ahead, through stuff, and so I didn't really, I guess, talk about a lot of things. So that's why I'm talking about them now. But this goes back to my first concert. It was at the Forum. Must have been, wasn't old enough to drive there. I don't think so. And it was Billy Idol at the Forum, and my buddy and I had the worst seats in the entire place. It was up in the top left corner, against the back. There was not a seat in the place worse than me. And we were just thrilled. I knew nothing about one seat being better than the other. I was just thrilled as can be to be there. And I'd never heard of the Cult. And they opened up, and they put on the show like no other show. They were there to prove a point that they were a serious band, and they came out and they played their whole set. So Ian's the singer and Billy's the guitar player, and on the last song, and it was probably Born to Be Wild, I'm guessing. It's probably on video somewhere. And they, as I read about it later, all the equipment that they had, I think besides Billy's guitar, were all rented equipment. And Billy did something like what Jimi Hendrix did at Monterey when Jimmy smashed his guitar, his Strat, and set it on fire. And now we all know about that. And that's from what, June of 67, June 18th, right, of 67, when he did that, that he went and he knew that this would get him in the press. And so he went during the last song, and Billy's playing this awesome solo, and he's just going around smashing everything. And he smashed, I think, the bass guitar player and the other guitar players' guitars, and he even smashes the drums, and he smashes everything, man. This rented equipment, and it was not gimmicky. It was just so real. I don't know if he planned on doing that ahead of time or what, but man, he was on a mission to let people know who they were. And that was just, oh, so exciting. And I was hooked. And then Billy Idol and Steve Stevens came out, and they played. And I was just so, I was in heaven because, he was, one of my favorites at the time. Still is. I don't listen to him much anymore, but I know he's back on tour, and I'm going to try to see that if I can. I was out of town when he was here in Austin recently. So anyways, the Cult Electric, that's what you need to put on. If you don't like good music, you will not like it. Guaranteed. If you like good music, you'll love it. Guaranteed. Take that to the bank. So anyways, just having a little fun. And man, this is a short one. I love it. An hour and 20 plus minutes. Man, I got to do more of them this way. I guess do them after a long day of work instead of a Saturday, and I'll keep them shorter. So hope you enjoyed it. These have been a ton of fun. I want to thank each and every single person who is put comments. Some of the comments are really long, and dude, write them long, man. I read them all. Like I haven't had a chance to respond to all of them, but man, they really make me happy. I got to tell you, and I'm struggling with some stuff in life right now, and boy, they put a smile on my face. So I appreciate it, and I haven't had a negative comment in so long, and man, hopefully never again, man. That's great. I love it. So thank you. But your job is for each one of these episodes that it's an honor system, and you have to go and do something kind, because we, with the WRO family, we are trying to do our part in changing the world. And everyone always says, oh, something is too big to overcome. Well, if you think that way, then we'll never get there. But you need to uh, find out what's important to you and do that. And to me, it really bothers me, all the mean people out there and the people that don't do kind things. So you can either just complain about it all day long, which I do. Anyone who knows me knows that I will complain. I'm human. But what you can do is change things, and that is to be part of the solution. And the solution is, well, that's funny because I always used to say, like when we were back in research back in the late 90s, there were all these things that were just done in the silliest ways, and people would complain and complain. And I got sick of hearing people complain. And so I came up with a solution box. And my thing was, it was a little shoe box or whatever. And if you had a problem, instead of having the problem, put a solution to the issue that you're seeing. It is a different mindset. And I thought that way for a long time. And then I kind of got away from that. And then recently, someone close to me was, I was complaining about something. And this person was like, well, let's focus on the solution. And it just cracked me up. And I was like, that's like me 20 years ago, man. And it was just a reminder that sometimes you go on the wrong path for a while, and then you got to find yourself back on that right path. Because how many paths are there that you can go on? Well, Robert taught us there are two paths that you can go on, right? And it's never too late to change the path you're on. Anyways, sorry, I can't help it. Like 3 people got that. Raise your hand if you got that. Yeah, I got it too. Stairway. Okay. So, anyways, be part of the solution. And so we are going to be part of the solution of trying to change the world for the better. And so you have to go out and do something kind for someone. It could be a family member, parents, your kids, cousins, aunts, uncles, grandparents, whatever, strangers, do something kind, big, small. every episode. Just think about it. If, I've done 22, 23 episodes now, this will be 24. That if each person who's watched this goes and does 24 positive things, just think that that starts morphing itself. And if you start telling people, like, to do kind things and just little things, like, you know, things will things will change. We see a lot of things out there that are negative, and so I, I'm being dead serious about this, like little changes, and so be kind, and that's a reminder to myself too. Um, so that's what we can do until next time. I do plan on, as soon as I can figure out how to logistically, I'm going to get some guests on here because I think that'll be a lot of fun. And so, if you have any ideas for guests, the one requirement two requirements I have, they have to be a nice person. Um, Number one, and number two, they have to be a nice person. So that's my thing, and I have to admire them in one way, shape, or form. And so with that, I think this is about it. So I'm not sure if this is going out before Father's Day or not. Um, might not be going out until after Father's Day. I'm recording this on June 3rd, but if it is going out before and my father is watching, I just want to thank you and my mother for being the greatest parents anyone could ask for to my sister and I, but more importantly, the best grandparents I've ever seen. And objectively, I've never seen any grandparents or even remotely in the same. You're great parents, but the level of grandparents you guys are just something I would strive to be one day if I'm blessed to be in that situation. So I just want to say Happy Father's Day, and again, another Happy Mother's Day. To my mother, even though that already happened, but they kind of go together, Mother and Father's Day. And so that's it. So go be kind, and I hope this one helped you out. Peace.